Let the stream go in here in just a second. Doing well, good. I am doing a-okay. My neck's a little bit sore. Just got back from the chiropractor, so we're working on it. It sucks. I have this big screen above me, which is all messed up. But I look up at the neck, or with my neck. Maybe I need to put it further away and a little lower. Savage ad. Love the name. It's got to be from Rob, huh? Hey guys, those on YouTube, we have the stream going in Discord too. So if there's any questions that you guys hear me talking about that are not in the chat, that will be why. That being said, we can take a look a little bit at what happened today. So today, I'm going to turn some of these indicators off. We will talk a little bit about those. But today's SPY got the inside day, 3-1 on the day. So either side of that gets your attention. Now they gap it down to start the day. So in the morning, anyone that was long, boom, instantly at a loss. So what did they do? Anyone long yesterday? They sold, right? First 15 minutes of the day, they sold. So now everyone's short, right? Because if you were long yesterday, you're out. And this huge puke, everyone's still short from that if they're still short or, in the morning session. So when we start coming back, you'll see the 2-2 15-minute reversal here at 65698. When this goes green here, 65371, the second 15 of the day, all those shorts are getting cremated. So they're having some trouble. And I made a really cool indicator just to kind of show what I mean by that. So just for example, right? When you look at this range, you can see, we can zoom out. We've taken out everything. Everyone's short because there's no longs or no lows to be long against at this point. It's just short, right? Unless it's a big time frame. You see, then they gap up. All these shorts just got taken out, but these guys are still short. So you can see they go to the nearby pivots and they take them out. And then what happens, right? Well, you got these guys long, these guys short, and we're going nowhere. And we're an inside week. So they start the broadening formation. You can see they make the new highs, they make the new lows. They're just going back and forth. Then notice they go into this low. Only thing the longs can be long against is this. So we pretty much take out everyone besides these guys. And everyone's short if we look up and left. So you can see throughout the rest of the day, there was some slight triangle layout. Boom, everyone gets long. And now going into tomorrow and the end of the day, everyone was long. So you can see they took some profit. So what we have is a broadening formation. So we make the new highs, make the new lows. The way we traded this today had nothing to do with any of these indicators. Just a cool way to kind of see it. But gap down, we look for gap down buy. What do we do on a gap down? We buy it. How do we buy it? 2 down, 2 up reversal. So if you're a Discord guy, we say to look for those simultaneous breaks. And so today, this is the best trade of the day off of the what would you call it? Off of the futures. But you're going to see we had the 30-minute 2 down, 2 up simultaneous break on a gap down. So that is a gap down buy simultaneously, the whole market. So when we have this, we have really high evidence. It's something like 80, 90, 100% win rate. It's up in there, dependent upon higher time frames, of course. But in this case, you'll see 2230 SPY, 2230 Qs, which was the last one to break. So if we were really slow to find it, you just buy Qs, which is what I did. 2230 Dow Jones, 2230 IBM. It's a buy. Now, when do you sell it? When it reverses. So you buy it here, 2, 2, 2, 2, 2, 2, 2, 2, 2, 1, 2, 1, reversal. Right there is how we get out. And for a 60 guy, 60 buy, inside 60 reversal, sell or flip it short right at the end of the day. So it's pretty textbook stuff as far as 30-60s go. You can see the gap down buy, the gap up sell has been playing off really nice with the open of the new quarter. You can see in here, gap up, sell. This was a 30 reversal. You can see in here, they gap above the highs, they sell. And then in here, China news, gap up, 2260 back down. Boom, right? And then today, gap down, 60 back up. Boom. So just really good stuff all around with the indexes. And you can see the first day of the quarter, gap down, buy it, boom. So have had some pretty fun stuff, just gapping up, gapping down, and playing those. But that was today. As far as, when that happens on SPY, what you want to buy is things taking yesterday's highs. So things that are on the gap list, gapping up, you could buy those. NVTS, right? This is a pretty nice one. In the morning, we actually bought it down in here on the Fiverr and a pretty nice ripper today. For the 30 guys, you had the 30 in here, which went all the way up into high day, reversed here against. There's some slight lower low in here. There's also stuff like AQMS on the gap list. Here, see this. Boom. Right? It's a gap up. So while the market's gapping down, this is gapping up. You want to know about that. We go to the 30, inside 30 signal right here to get in, and it rallied 114% after that. The gappers are really nuts, right? We had some other gaps at ABAT, which we found intraday. Or actually, I believe we found it in the morning. Could be incorrect. But we'll see I had the reclaim up in here, and it just sends them rallying the rest of the day with a 60 hammer in here, which sent them moving the rest of the day. So there's some pretty strong gap up names to play off of. And then we also had some stuff we discussed yesterday. And this morning specifically. Yesterday we made the video and we were like, everything's inside. So pick your poison. What we want to do is we want to identify where the most aggressive buying is once tomorrow opens up. So one thing we saw was Jets. They gapped down on the day. That's a buy, right? We'll see in the morning, they went 15ers up right away. So SPY took out the morning lows. This took out the highs. That had to be stronger than SPY. And then you'll see 2230 here with the SPY to buy it. So they were firmer in the morning and they continued that firmness when the 3060 started breaking. And you'll see here, it was a 260 minute versus SPY was a 2 down, 2 up. So SPY was going down. Jets, after the first 60 of the day, had already recovered and were taking yesterday's highs out. So they were a little stronger, which tells you, United Airlines had a pretty nice day in here. Delta Airlines, see the inside day up, pretty nice day. American Airlines, nice day in here as well. So specifically that, and then we saw Dow Jones, of course, with the industrials and the transports all doing the same thing. So we had more industrial interest today, and then we had like a lot of small cap, which we mentioned in last night's vid. IWM is stronger because it's closer to taking out Friday's highs. And that's how you gauge strength and weakness. Big bad news comes out. Who's trading above that bad news? But in this case, gap down buy, and you can see IWM takes last week's highs. So anyone short last week, they're out or getting out, according to that. That being said, the strongest stuff would have been weekly signals up. So Walmart takes the weekly signal up. We saw McDonald's take the weekly signal up. So some of these guys did not play them myself. And then, the strongest would have just been things that never reversed down, which were a lot of your small cap stuff. Like AQMS, you can see it went 2 weak this week. GWAV, right, taking last week's highs. So it really didn't go down much last week, and then they just go crazy this week, which when you see, like ABAT, for example, whole market outside week, this is bright green at the highs. Buyers are not worried here. So they're just following through. But when you see a big move in the market, what matters is not, the day of the move right here. Although you can trade that, right? What matters is who's confirming and negating that, meaning who's taking out Friday's highs and Friday's lows, because that tells you who's strong and weak. And that comes into play, a lot with your day trading, especially around the news events. Hopefully that makes sense. Now, if you have questions, let's get into it. So we see one question here. What internals can I look at when trading NASDAQ? How would I use those internals to help me make a trade decision? How would I get around the hourly candles? Because internals would update at the bottom of the hour and Q updates at the top. So you can use the top of the hour. We just like the bottom because news events tend to come out at the bottom of the hour, kind of like today. Trump sent his tweet out right when the new 60 went inside 60 down. So he sent the tweet there. And, you know, SPY, for example, with China news, first 60 up, second 60 down. That's when the China news came out. So we like the 60 for that reason at the bottom of the hour, but you can still work with it at the top of the hour. You would simply have to turn extended hours trading on, which you can see there's still two 260s here and here, still the inside 60 down with the news. It's just a different chart. So you can use both. Doesn't really matter. We just have preference slightly. And then as far as which internals to look at, you can look at the VIX. So when the VIX makes the new highs and starts coming back in or triggering signals back down, that's when we can expect things to firm up. Doesn't mean it has to recover, but you can expect things to firm up. And so like in the morning, we saw VIX 3,260 down. That's a buy, right? End of day, 2,260 up. That was a little hint at, hey, things are potentially coming the other way, which it did. So you can use that. And I do like using that when you're trying to time, you know, big down moves, big up moves. You want the VIX to have signals up when the market's really going to come in. Kind of like last week, you had the inside week signal, which triggered the inside month 312 signal, already hit its target. You know, with the China news, all those signals came into play, and that could, you know, hint at the market moving because the signals are there, since the signals cause movement. So that is one way to do it. As far as what, you know, sectors and what not you would like to watch, ideally you want to watch the Mag 7. So like things that are very big parts of the NASDAQ. So you can do just like, what are the top holdings? Come on. NASDAQ by percentage weight. Just to give you an idea of this. NVIDIA is 11%, Microsoft's 10%, Apple is 10%, AVGO is 7%, Amazon's 6%. So you can see if you just watch these names, this can help you with the NASDAQ. So if you're just trading NQ, you can watch those names. You can also break it down to sector ETFs. The NASDAQ holds a lot of tech, XLK, and it holds a lot of semis, SMH. And there's a little bit of XLY, consumer discretionary. So when you're trading like this morning, let's just say we're looking at the bottom of the hour or top of the hour 60. XLY has a hammer going into the morning open on the 60-minute. Tech, you see, had the slight hammer this morning on the 60-minute. Semis had the hammer on the 60-minute. So what's about to happen? Simultaneous break in NASDAQ. So if we go to NQ, hammer, simultaneous 60-minute. So you can see we can gain evidence by looking at those sector ETFs, as well as, you know, if we like NVIDIA, you see on the 60, this one didn't recover. So we did not have NVIDIA. Apple, slightly, right? If we work our way down the list, Amazon, slightly, right? So it wasn't the leaders that caused the tech to go. And this is actually why tech was slightly weaker this morning. On the rally, it was the last one to break. We didn't see any of these big holdings going. Go AVGO, slightly. So you can see it's like we just went through 30%, 40% of the NASDAQ, and these all were no signals. So it wasn't really the top holdings. It was more the bottom, you know, 50% of holdings really just hold a little bit. So smaller companies, which isn't relevant to you, but it's a good example. And that's why we can play, or we don't have to just play NASDAQ, right? We can look for, you look at the SPY or the ES1. This had the hammer too. So you can confirm between the holdings of the NASDAQ, like we showed you, which there wasn't much evidence. You can confirm with the sectors, which did have confirming signals. You can also confirm between the NASDAQ and ES. So ES hammer, NASDAQ hammer, or NQ1, sorry. NQ hammer. Then we go to Dow Jones, hammer on the 60-minute at the open. We go to the RTY. See RTY outside bar. So this is more aggressive and stronger. So you can see they were all hammer besides RTY, which means this is the one you actually wanted to buy because it had relative strength. So hopefully that makes sense. I know it's a lot of data, but you can pick and choose. You can just use the 4 indexes if you wanted. You could use just the 4 indexes and some of the sectors. You could use just the holdings of those indexes, the top holdings of just the NASDAQ. What I would suggest is looking at all 4 indexes and the sector ETFs all at the same time. So failed twos, let's see. Technical outweighs news. So the way it works is like, if the news is going to be really good or really bad, the chart shows it. Like, and if the news is really bad, but the chart's going up, the bad news is good. So it really doesn't matter what the news is. All the news does is increase participation or increase volatility. So when we're looking at SPY, right? Notice we make a new low and we form a hammer signal, just like we did today, right? You go to SPY on the 60. Notice new low, hammer signal, that's a buy, right? So we go to SPY monthly, is that the same condition? New low and a hammer signal, it is. So when this breaks, does it matter if the Fed cuts rates or if it doesn't? Maybe, right? But it reversed. So if news is gonna be really bad and price is gonna reverse, we would have to reverse back down, which would be what? We'd have to take last month's lows. So if we don't take last month's lows, it's still going up, which means, you know, the bad news isn't bad enough, right? So news isn't going to matter too much to us. It's more, when is price reversing, because that's allowing us to know what price is doing. Like for example here, new high, shooter signal off all-time highs. That shooter signal breaks here, causes movement. Was there bad news in there? Probably, but the shooter signal formed and then that happened. The hammer formed and then, you know, they're printed money and inflation and whatnot. If we go to the day, specifically the US 500, it went 2 up and red. So you can see we have new highs, 2 up and red. So not a shooter signal, but it's 2 up and red. So it's closer to 2 down. When this breaks, that is a reversal back through a range. So news or not, that's what price is doing. Doesn't matter if there's news or not. If we just compare that same setup to this one, you'll see it made what, 0.2 points higher high, and then red, and then it breaks, and then it pukes, and then they recover. So this reversal and this reversal are the exact same. The only difference was this reversal changed the month to red. If you look at it, you see how the month went red during that reversal, so it went further. Whereas when this reversal occurred, the month stayed green, so it didn't go as far. All right. Could you talk about failed twos going 3 and use them for trading on lower time frames? Yeah. Well, I mean, I just showed you 2 up and red. It's a failed 2 going 3. The 2-2 reversal causes the 3. So when you're trading, we know price does this, makes a slight higher high and then changes direction. So in 1 bar, it will look like that. In 2 bars, it would look like this. So you can see this is the same thing. These 2 bars being outside of these 2 bars, it's the same as these 2, or this bar, I mean, being outside of this bar. And when I say outside, I mean, notice how it made new highs and it made new lows. So this is outside of this. So when you're timing signals, it goes 2 up in red, then it reverses. Boom. Right? Doesn't have to reverse, but that's why it's called a reversal when it breaks. It's not a reversal if it hasn't broken. So when you're trading 2-2 reversals, what you're going to do is, like I've shown you, we want to time these at new highs, at new lows. And there's a reason. If we just show you, this is going to show you pivot levels and whatnot. But in order for us to get a big move, we need to have traders that we can stop out. So when we look at this previous range here, you can see these guys all bought, and it's making higher lows to all these lows here that we have marked out. Therefore, these guys are probably still in their buys if they're not, you know, reducing. So these buyers are fine. They're holding. When we start taking those pivots, we cause buyers to have to get out. So it's like, boom, we take that pivot. Now the question then is, does it stay below that, or do we reclaim it and then start going the other way again, right? So you can see it reclaims, comes back above it. Does it hold? You can see, boom, now it's going the other way, and see we now have this pivot to take out at the highs. You can see it, then it goes red, so now we're in an inside bar. But then it flips green, and now it takes out the highs. So when we're looking to trade, we want to time it after that low or after that high when continuity or when the color changes. So you see when that goes red, that's when we want to try and time signals to take pivots out. And then when it flips green, it's like it's perfectly fine. Now, this doesn't mean, it goes red, we're short. It goes green, we're long. It goes red, we're short. You can do that. It's called continuity entries. But that only works when volatility is high, meaning like NVT or AQMS today would be an example, or like SPY, not even SPY. I guess SPY is an example today. So like SPY today, it gapped down and went red, and then it flipped green. We could just buy it when it does that, but we want to line it up with the reversal so we can manage the risk better. But we're just going to keep playing this through, and I want you to see, it's like notice how we're at the highs. No one's short. So as long as the buyer keeps buying, if everyone's long and they're still buying, that's good, right? But the second you get some short selling that starts kicking in and taking out pivots, you're going to see, and we haven't taken many out yet, but once we can take out a pivot or two, then it starts triggering other guys to do stuff. You can see it makes new all-time highs, triggers 2 pivots, 3 pivots, right? Causing people to do stuff, and volatility increases. Then boom, takes out more pivots. Then you see it reclaims all those lows. And then notice when it changes direction, now we have shorts to take out. So we can target those shorts. It takes a couple months here. But you can see, right, when price is changing color, changing direction, that's when we want to time it back through a range. So when we're trading any reversal, the 2-2 is, the same as anything else. What we want to do is we want to look at it and look at the previous range and say, okay, do we have range to come back through, right? So like if we just go in here, for example, we have the 2 up and red. Look down and left, right? Do we have pivots to trade through right here? We do, right? So if we have those pivots to trade through, the 2-2 reversal, when this is 2 down and below last month's lows, it's attempting to do that. And you'll see it flips green, then it flips back red, and then it starts taking some guys out. Then it flips red here, takes out some pivots, which you'll see triggers more pivots, right? And then they're kind of just grinding down at this point. You see that 2-2, we have targets to go after. And which also means, there's people that are long that are getting out of here. Now, when we watch this, you can see when it goes green, it's not a buy signal. It's when it reverses as far as the monthly buy signal is concerned. But you can see we take out some pivots. And then look, right? We close as a hammer. Is this closer to becoming a 2 up or a 2 down? It's like, well, when it opens, it's $4 away from 2 up, 22 away from 2 down. So what is it more likely to do? Well, it's more likely to take last month's highs. If we are above last month's highs, what is that? It's a reversal. What are we going to pair that reversal with? Losing shorts. So anyone short in here for the past 182 days, we're coming for those guys. Because as we break those pivots, what we'll see is we will cause them to close their shorts, which speeds price up. So you can see back through that range way, way faster than going down, right? And you see in this case, they break down, don't take any pivots out. Then they break up and you see they take out this, and we're kind of slow to it or too quick through it. But you can see we have these targets here, and then we have all-time highs to target. So when we look at this on the month, and again, another example of, news comes out, but see 2 down, anytime it's above the month open, we have 2-2 reversal. Where's it going? It's trying to take this out, which means it's also potentially trying to take this out, the new highs. So it breaks. Now we've triggered anyone short last month underwater. They're going to have to buy. In this case, AMD gaps up. We take out the pivots. And then you can see take out the all-time high pivot. And now we look at the chart. Everyone's long, right? There's nothing to be short against. If you're short against these highs, you're out. So if you're short blindly, right? And that's not really who we're looking for as far as like stopping people out. Now, if we go to like a 60-minute, you will have, shorts entering the market in here. You'll have some people who are long. So See, they might stop them out. But this is kind of where it's sitting now. Right? So now you can see it's sideways. So it could go down, could go up as far as we're concerned. What we like to see is, can we take out all the longs and then take out all the shorts? That'd be ideal. But hopefully that makes sense. Like what a lot of people say, like when people are trading, what they'll say is like, they'll go like this. They'll say, okay, this is my level, right? Either I'm going to be buying the breakout or I'm short against that. What most people do is they'll go long and then they'll say, let's just say, for example, let's say they buy it long, right? And they could have bought in here because it went up in here, it went up in here. So they could have bought, and then they put their stops here. And this is just a way to think of it. So if you have 5 guys who bought, this is a Rob Smith example, but if you have 5 guys who bought, and this level is, let's say, Rob's exact number, 36. So if this low is 36, you then ask those guys, where's your stop? They're going to say 35.99, right below that. Now, does this have to be happening for the broad information to work? No. But what happens is price will use signals. So this 2-2 reversal, or let's say this inside bar. When this inside bar forms, we can use that to trigger things. So you could look at this, 36 level, and you could say, well, anyone long against that level, I'm going to use this inside bar to break it. Boom. And now they have to figure out what they're going to do. Are they going to stop out, get back in? Are they going to buy more? Are they going to sell, just completely get out of it? We're forcing them to do something. The same thing's true the other way. Let's say we go inside bar again, the seller comes back, but then we start reclaiming back into the range. So now we have a 2 down and green. It is also a hammer, because it looks like a hammer, like literally a hammer, right? So we can then say, okay, well, this 2-2 reversal, what would this do? Well, anyone that was long before in here, we also took out anyone long against this stuff. These guys who were long, they're gone. The only guys we have are anyone short in this range. So when this breaks, what's it going to do? It's going to reclaim this low back into the range. And we also have targets to take out these guys. So when it breaks, let's say it goes like this, boom. You can hear the stops going off, right? It breaks and it goes stop, stop, stops. It's just taking everyone out. And this is the broadening formation. So you can use signals to time the break of a formation. You can also use signals to reclaim a formation. And that's how we want to think. So if we look at any chart, you're going to have broadening formations going on. It's just a matter of, are you breaking it or are you reclaiming it? So let's take a look here. If we go on AMD, right? All-time highs is over here. So we break all-time highs. This goes 2 up in red. What would that do? It would reclaim all-time highs back into the range, right? And do we have anyone long? Well, these guys are long. So when this breaks, we're forcing those guys to take profit, which creates the winning position. Now, if they're really going to follow it through, we would have this reversal tomorrow through all this stuff. So maybe we take out everyone, and then we might broaden it back up if we can reclaim these lows. Or you could say, use this gap as a support, right? Whatever you want to look, or however you want to look at it. But that's the idea. And then it's a matter of, when you take the reversal, how much evidence do you have? So if we go to like uranium, for example, it's just a good example. We're always going to come back to it. 1 second. Food was boiling. Right. So you can see, right? We make a new low. So if we get the liquidity, on here, just take a look. you can see, right? Anyone long in this whole entire range, gone. They're out. Everyone here is short. So when we come back in, reclaiming that range, and we change color, we now have pivot, 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 all these guys to take out. And we have a buyer here. And you need to think this way too. All the buyers are gone, right? Like if you see Palantir go from $1 to $10 to 20 cents, what happened to all the buyers? Gone. So if they're going to buy, then the buyers come back, right? And everyone that's a buyer that wants to buy the stock isn't in the trade. So everyone has to buy if they're going to. So you need to think of it like, okay, I want to be long this thing, uranium. I don't want anyone else in the trade with me. So we take them out, and then it changes color. It's like, yep, all the longs are gone. Now I'm going to buy. Because that's when the market tends to go. And you see the 2-2 reversal occurs. We have pivot targets, and it will speed price up as it trades through. Boom, right? So you can see all the shorts. And then since we have a buyer in here, and it's like true buying, right? Doesn't matter news, whatever it is. As long as it doesn't reverse, this is still going, right? And you can see how it gets outside of this range. Now, guess what? You saw we took out all the shorts, right? Imagine you've been shorting uranium at all in this range. Now it's above you. And not everyone closes their trades right away, right? Like you have these funds, like right now, I can tell you for certain there's billions of dollars if we go in here. I can tell you for certain there is billions of dollars, if not just hundreds of millions, riding on the short trade of things like QBTS, the quantum computers, because they make no money. They shouldn't be going up. The same way GameStop, right? They make no money. They shouldn't be going up. Everyone's shorting it, like all the funds and whatnot. They're getting blown out. So what happens when you can see in here, it's like, what happened here? Well, a fund might have put on a short, right? It was red. They sold it. What about here? A fund may be putting on a short here, right? Someone is. That's why it's going down. It's either that or profit taking. It tends to be both. So when you get above all this, it's like, okay, they sold in this range. And now we're above it. If we never come back to that range, those shorts are forced to buy higher. So not every rally you see is just like the buyers are really aggressive. It's also the shorts are covering. And we have a cool little thing to show this. So you can see once eventually this happens, but eventually the range expands. Once you're outside of the previous range, there's an unwinding of positions. So it's like, imagine if this is like a yearly chart. It's like if this was a currency, you have funds shorting, let's just say it's the euro or something. And then everyone's short, all the funds that are long gone. It reverses. Now they have to unwind that short. And if they don't, they'll be forced to once we are trading above that range. Because once we're above this whole entire range, they have to eventually. You can't hold on and be short forever because they'll lose everything. So those shorts unwind. This is also one of the reasons, on the upside, you get a lot more expansion into all-time highs because you have that and you're pairing it with aggressive buying when you have continuity. But you can see, right, we're looking at QBTS. It's like, if you're short, what are you short against, right? Look at all these lows in here. What are you short against? If you're short against these highs, you're out, right? So you're getting blown out. These shorts are getting wrecked. And then eventually these shorts are going to win. It's probably going to be red on the month when they win, but we'll see. The EDU channel, I did put it together. I haven't sat down to plan out the first course of action. I was actually going to talk to T-Trades first, because I think he could give me some good advice there. As far as the best way to find signals, we had a question. I'm going to say I like the Strat Scanner because it's our product, of course, but it makes it really easy to go in there and get exactly what you want. So if we are looking for, let's say tomorrow or yesterday, if we're looking for signals yesterday, everything was inside day, 641 names. So we can take that list and we can filter it and be like, I want to only take those names. You can see I copied those names, just this button here. I only want to buy names that are 2-up month and going somewhere, green, right? So what did we talk about? Well, BKSY, Hut. And we can work our way down. We saw some others, Riot, Mara. So we saw some of these specific miners, which are now turning into like just compute centers. We also saw, AMD, some other stuff like this, right? So if we're going to buy, we want to buy these names. So just for example, we'll filter out anything less than 20% gain. We could go 15%. We'll just, have enough in here. Let's see. So we can now copy the list again. You can just say, like, I'm just going to trade this stuff. And we're looking at percent gain. So this will give us a lot more small caps versus dollar change. But nonetheless, so we can now take this list, and that's what we're going to play with tomorrow. To the upside, we'd prefer that. And then today, I won't be able to show you intraday scans because we don't have that in calendar mode. But then today, you can see the bullish ones, right? This is where we wanted to be in any of these names that closed up on the day. Now, we don't have to go in there and just buy all of them or sell all of them. What we can do is we can let it open a little bit and then go after it, or we can pick our few favorites and go after it. In this case, if we take a look, you'll see IREN. So first it goes down. We know we don't want to sell it. This is one of the stronger names this month. Then it goes green, we buy it. And then boom, there's your 3. So if we're going to time signals on that list, same thing. Here's your hammer 60-minute after taking yesterday's lows in this case, and then goes back to the upside. Go to a 30-minute. We can turn extended hours off since we don't use that. We go to the 30-minute though. The first 30 of the day goes hammer. So we have 30 minutes to see that this is setting up on our watch list of, let's say, it was like 17 names. So if you have 17 charts, how fast can you go and just look? Is there a hammer? Is there a 2-2 setting up? Right? In reality, you should be able to do that in like 30 seconds to a minute. Like I can quickly get through these. And if you have 2 screens, 3 screens, you could have your whole list up on, the 3060s and you can find it. But in this case, right? 2 down, hammer, we can buy it there. Let's say we missed it and it's going up in here and we're like, wow, we missed that first one. Well, we can just wait for the next one. 2 down, hammer, boom, there's the next one and you're in. This also helps us where we don't have to go buy it right in the morning. We can find the signal on the stronger ones. So it's like by the time this signal broke, it's up 3% on the day. Who's to say it can't go another 3% or more? BKSY, we're going to see the same type of thing, right? New low, it goes green, it's a buy. Right? Hut, same thing, new low. We prefer to buy it since it's so green this month, and then it goes green, we buy it, new high. And you can see it's relatively simple. UBX. So this was a signal in force break to the upside instead of a rejection. But you can see in here, in the morning, this is Tuesday morning, 3-1. 2 doesn't work, stops you out. So be it. 2 down, 2 up, get back in, boom. Inside bar add, boom. 2-2 against, get out at the end of the day. So you can see, you might take, at worst, 42-cent loss, maybe 50 cents. And then $5 gain. Pretty good. Up into this reversal, it'd be slightly less, 408. But you can see, right? Pretty simple. And now let's go to some of the ones that were down on the day. SMCX goes inside day down. You can see in the morning, did we have the hammer 30 like we saw on REN? No. Went 3-1-2 up, didn't go anywhere. You can see now they're just sitting right at the open. So you can do what we call battle, right? Goes down, then it goes 2 going 3 up. Maybe you can make some money up into high day. Then it goes reversal against, then continuation against. So if we're in here, right, we take it up, maybe it stops us out and we lose 40 cents. So be it. 2 down in green in here, or maybe a 3-2. Maybe you can make, 70 cents back. And it goes reversal. If you held on to it, maybe you make 32 cents. You make a little bit back. And then that was it. Right? No reversals, no signals up. That broke. So not every single set up, like daily signal, would be a winner. But the key is, can you create the trade and get out if it's not winning. Stay in if it is winning. We go to CEG. You can see another example, inside day. Gaps down, hammer 30 minute. Gaps down, hammer 60 minute. So we can look for these on our daily signal lists, and the same goes for anything. But hopefully that makes sense. Like, how can you find the setups? You just have to pick a condition you're willing to trade. It could be, you know, just scan for outside days. It could be scan for inside days, scan for 2 down in green or 2 up in red days. Doesn't matter to me. What matters is, do you scan for the same thing every time? And then do you have a way to trade into those signals using a lower time frame? In this case, you know, the 30-60. NQ outside candle today. Well, let's see. So this is how we want to think, right? We have the 3. It's your broad information. So we go to the 60. If you were going to buy it, you would have bought that 60 hammer in the morning, and then it reduced if you're going to plan on swinging it. Now in this case, right, we can see this. See how this low and this high really far away from current price? Until you can take this low out or these highs out, not much we want to do. You're going to need a signal to cause that, which maybe you go rev strat and it does cause something. Who knows? Now when we go to the day, you can see they sold today. So if it went down, it'd be continuation. If it goes up, it's reversal back through people who are short. Since we want to create winning trades, we prefer to trade against people who are short or against people who are long. So we prefer to take this high out because it'd give us a bigger move. Now, if it does go continuation down below this, we could take last week's lows out and keep going. We'll have to see. But when it's a scenario 1 like this, we don't know. Sideways. You see on a 12-hour, maybe if it takes this out, it could take the day out. It could take out last week's highs and then cause your PMG. Gold is happy? Oh yeah. Told everyone to buy gold. That's 100% from our inside year signal. And you can see, right? You just have to pick a condition and stick with it. In this case, 1, 3, 1, 2. So we scan for that 3, 1, trade the 2. We also saw during that year of our yearly signals, financials, inside year, boom. You can see discretionary, same thing. It's actually a 2 down, 2 up year. Hourly simultaneous break valid even though the chart updates. Yep. You can trade, we say 30-60 simultaneous breaks. When you're trading the sideways 60, which is the top of the hour, it's pretty much, it's a 30-minute break that's causing that normally, which is why we look at the 30 and the 60. You guys have any other questions that we can tackle? Riot. Take a look. Riot is you can see 17-cent lower low and then move $17 to last year's range. Now, when we look at Riot, you can see we have a big previous range in here, but we're stuck right in the middle. So what we'd want to see is 3-2 expansion. Because once you get a 3 and it goes 2, even if you're inside bar, it's more likely that it's going to work and get outside of that range. I don't know if there's an example on this chart specifically, but you can see like inside year in here. If you go to like the quarter, you'll see this. These 2 quarters become a 3 to this quarter. So this is the 3. You can see in this case, slight lower high, but then they get out of it to the downside, which causes all that stuff to kick in, which you can see it ticks down and then again, sideways for a year. But the idea is there, right? And the way that works is like this. So a 3 is just a broadening formation. So for example, you can see this one, right? New high, new low, new high, new low. Lower highs, which is normally what happens when you're going to expand. Notice once they get out of the bottom of this, then things take over. And what they're trying to do is take these lows out. And then they reclaim those lows. And now this broadening formation turns into levels of reclaim back to the upside, right? Once they get back above this, up they go. You can see how the 2-2 day right here causes that to happen to get back above here. So it's all about using those signals to reclaim levels, using those signals to trigger levels. When trading a 3-1-2, do you prefer stops based off the 1 or the 2 bar? You can really use either. What matters is that your stops are not super wide. When you have simultaneous breaks, you can widen them up because we have higher evidence. But what we don't want to see is stuff like this, where it's like, I'm going to buy this gap down with 10% of my account, and that's going to be my stop. So, if I lose 10% of my account or something. Not what we want to do. What we want to do, switch to like a weekly. You want to see this inside week and be like, okay, well, if I'm going to widen my stop, let's say we're trading shares, I'm going to put 1% of my account into this trade, and my stop will be 9% loss on that, which would be, you'd lose 10% of 1%. So you'd lose like 0.1% of your account value if you're wrong, right? It's like you can recover from that, right? 0.1%. That's like a sneeze and it recovers. So when we take it, you risk a small amount of your account and then add. So if we're right, we want to be really right and add, or we can just hold, right? If you have 1% of your account in this trade and it goes up 100%, you'd make 1%, right? Which is not what I'm suggesting, but I'm just giving you the idea. So what we can do then is we can time, let's say we time this 2-2 reversal here, right? Their trade looks something like this. So this is what our trade looks like, right? We're risking, let's just say 0.1% of our account, targeting this. We have the broadening formation. Now, as it goes up, we can, once it reverses, reduce it by half to guarantee it's a winner. So if we reduce by half, in this case, let's say we do it at the first reversal, 14%, $1. So we make $1 a share. That means our break-even stop would actually be down here now. So this is our trade, and we have a 0.5% of our account in it. Then, when you get a reversal here, put 5% of your account in the reversal, right? Because once that works and it takes out its first target and goes up here, by the end of the week, if you reduce it again, your break-even stop actually goes lower, depending on how much you're holding. But if it does go higher and you average up, you want your break-even stop to then end up below these lows. So if we buy, let's say we buy 2, reduce 1, puts our break-even stop here. Then we buy two more, or let's say we double our position size, whatever we do. If we double it, our break-even stop goes here. Let's say we triple it, our break-even stop is now here. So we can risk the money we already made instead of risking our account. Then you can see it ticks down. Once this goes 3, maybe we try and buy it in here, right? Whenever we take out last week's lows and form signals to reclaim it. So let's say we added just randomly in here. When it goes 3, reversal. So we add, if we double our position size, our break-even stop can then go here. So you can see the whole time we're walking up this trade, still targeting the same targets, we can then increase our risk without increasing our risk on our account, at least as much, right? If there's gaps or something, that obviously will, be like once in a blue moon where something bad does occur. And that's why we don't want our whole account in the trade. Like everyone wants to put 100% of their account here, take out 100% up here. But what we really want to do is think like a fisherman, right? Like you're casting nets. Would you rather, if you're a fisherman, you had to catch fish, and each fish you caught was like between $1 and $10 a pound or something, right? Would you rather spend all of your money on one good net and put it in one lake? Or would you rather take the money you were going to spend on like a one amazing net and spend it on 10 cheaper nets and put your nets in different lakes, in different ponds, in rivers, wherever you're, anywhere else? Which one is likely to catch more fish? Well, more than likely, it's the one that puts 10 nets out versus one. So we don't want to go in there, whole account in one thing. That's like, one net. You might toss it in the lake and there's no fish in that lake. It's like, well, that sucks. You lose your whole account. Versus if you have 100% of your account to work with, if each net you cast is 1% of your account and you can add, right? Like if you buy 1% down here and then all of a sudden you're like, wow, it's at 11. I didn't even get to add to it. You can add to it at 12, right? Wherever you can find a way in. That's going to do better because you're kind of putting the feelers out, and then the ones that start taking off, when they do form a red bar and then reclaim that and keep going, then you can add to it and really press. Does that make sense? XOP. Well, XOP, we do have energy numbers coming out tomorrow, so you're going to want to know about those. It's going to be closer to a 2-2 day. However, you're still mother bar stuck inside of this. So if they're going to go down, you'd want to see ideally take out yesterday's highs and then start going 3 the other way. That'd be fun. Or even just take out yesterday's lows, take them all out through these pivots. And you can see XOP, right? New highs up in here, new lows down in here. So you can see, right? When you look at this and you look left and you're like, wow, we have a shooter signal right here. It's like, I want to play that. It's like, well, am I going to risk my stop all the way up here? Probably not. I'd rather go tighter on shooters. But all you have to do is catch this part. It's like, boom, winning trade. If you reduce it by half, let's say you get a really bad reduction, you reduce it by half here. Now your break-even stop is right there. And now you can hold into this. Right? And then anytime you can get an ad, lets you get in there and risk their money. And you can see NVTS. We were talking about this one like way back in here. New high, change in continuity, reclaim, boom. New low, 2-2 reversal, 1% of your account. right? Closes a red bar and then you get continuation. Maybe you get an add in here all the way through. And the other thing that's cool is with ads, so like if you take a weekly signal at the bottom of a weekly triangle, eventually there's a monthly signal to add to. You're gonna have a 2-week signal to add to, 3-week signal, rev strat, right? You're like a 6-week chart, right? There's so many different ways to get ads. So it's never, I can't add to my position. It's always, I have too much and I'm in this position and I'm losing a ton of money, right? That's the problem we want to avoid. The continuations, you can. Again, you can add however you want. What matters is, are you in a losing trade? And where's your stop? Like if you buy NVTS down here at $2 and it goes up to $9, if you were to add to it at 9 and double your position, your break-even stop is at like 450. Do that if you want. Right? It doesn't matter to me. What matters is, do you have a stop where if you get out after adding, you're not at a loss? Because if you add, and then take a loss on that trade, you're doing it wrong. It's always buy, add, reduce, right? It's never buy, add, take a huge loss. Because if we're doing that, then we're adding to our losers, which is not good. Struggle with confidence in the trade. Well, think of it this way, right? If you were I would say the main thing you can do if you're like struggling to be confident in trades is not like trick yourself or, some weird advice. It's just, can you actually frame what is happening on the chart in your mind properly? Because if you like, if I just told you, imagine in your head, you're looking at a chart or an order book, and you look at the order book, and last month there was 100 million shares sold short on whatever stock it is that you're trading. And this month, we just traded above last month's highs. So you have 100 million shares short, and we're trading above the prices those were sold short at. Wouldn't you want to hold on to that and just be like, these guys are so freaking screwed. As long as we're above last month's highs, these guys are so freaking screwed. How long are they screwed, right? All month. They have all month to get out, and then we'll have to see next month. You'd always want to hold the trade because you're looking at it and you're like, duh, right? Duh. That's the trade I want. So when you're looking at the chart, if you understand what the chart's doing, that's the mentality you want to have. And that doesn't mean you're right every time, right? But when your conditions are present and you're like, every time this works. And if it doesn't, so be it. But this is going to work every time. And that's how, business works. That's how trading works. Because any business in the world can come up with an ad and be like, every time we did this ad, it killed. It was such a good ad. We're going to do it again this year. And then they go do it again this year and they get 2 sales versus last year they did 10,000. It's like, what changed? It's like, well, nothing changed. The only thing that changed is the context of, what was happening, in the world or the economy or whatever is going on. The ad never changed. So in trading, the reversals never change. Price reverses in only a certain amount of ways. What does change is, do the buyers keep buying or do the sellers keep selling? Because that can change. So, for example, here, we can see they made new lows and they start rejecting. What is that every single time? It's like they sold short and now we're trading above the shorts. Uh-oh. Right? That's something we want to be long. And then it keeps going. Right? And then we make new highs. Once we've made those new highs, now the question isn't, is there buyers, or were they strong enough? The question is, are they going to stick around and keep buying more? Because if they don't keep buying more, the next thing that's going to happen is profit taking. So then it flips red, and now those buyers are gone, right? Changes what's happening. So that's all that's happening when you're looking at a chart. It's like they got short. We made the new low. There's my reversal. So it's like, what does the chart look like? Well, they're short. Anyone that was long before, they're out. And we just reversed up. So it's like they're all short. Price is now going up. What do the shorts have to do? They have to get out. So as long as that's the condition, you should be like, woo, kill the shorts. Like that's how you want to think. Now, if it changes, when things change, that's when you want to start changing what you're thinking. So like when we look at this, there's two ways to, trail stops and whatnot. There's trend, which would be the lows of these bars over here, right? So we have higher low, higher low, higher low, higher low, higher low. This would be trailing the trend. And then there's continuity. It's like when this is red here, that's when you're defending your trade with stops, reductions, exits, whatever it is. So the goal is we take the reversal and then we have 0 reversals against us, meaning all these lows are higher. That's always the goal. So if that's the goal, what does it look like first? Well, first it looks like it's going down. Then it reverses. Now it looks like it's going up. When this reverses, we should be like, woo, screw the shorts, right? We're going to take them all out because that's what it looks like if it's going to go up there. You have the reversal at the bottom of the range. And then it continues. We're like, yeah, dude, these shorts are fucked. It's like, they're so screwed. Then, right, it ticks up and it starts coming red. And we're like, oh, okay, well, now that changes things. Because we took out last week's highs and we're red. Then we ask ourselves, though, it's like, do we want to hold the trade or not? Do we want to reduce it? So whenever this starts coming back in, it doesn't have to be right at $7, but once it's trading $6.90, $6.80, $6.70, it's like, okay, am I going to reduce this? Am I going to hold this? Am I going to exit this? What am I going to do? The one thing you can say, though, is it still hasn't reversed. And that's my favorite, couple words. Still hasn't reversed. Or you could say still good. Because this is still an uptrend. Higher highs, higher lows. So unless they make lower lows, it hasn't reversed. So what we can also then think is, okay, well, if this closes, let's say price doesn't reverse. So it made a higher low and then the next bar opens, it goes green. Then what? The shorts just tried to get more short and they're losing more. That's when we add. Because it was going up. It's like, screw the shorts, screw the shorts. The shorts are like, okay, we're going to try and get short again. And then it starts going green here. The second that's green, it's like, uh-oh. All of these guys who are short and anyone short in this range, they now have trouble still. And it still has not reversed, so it's still good. And then it's still good, and it blows out the shorts. And then it's still good. Now anyone short, as price expands above $10, you see it goes from 10 to 13, so 30%. Right? As that happens, these shorts have to bid prices higher, chase them higher. Does that make sense? It's like when we go to SPY, it's like, why can we go on SPY? Why can we call the bottom of the market on YouTube and just say like, hey, the whole market's about to bottom out? And then it rallies for 5 or 6 months. Well, we make new lows. So, right, we look at this. Anyone long in this range, they're gone. So if the longs are going to get back in, they have to get back in. And they're all sidelined. So we have new lows, and then we have the reversal. So we look at this. It's like, these guys were short last month. If we're above last month's highs, anyone short last month, they have to buy. Or they're going to have to buy higher. So you can see it starts off, it breaks. Okay, now all the shorts are starting to cover. What's it going to do? Well, these guys short in here, they're going to have to get out. Anyone short in here has to get out too. So as it trades through the range, we're like, screw the shorts, get them, right, get them. Like, oh, and then it gets up here and everyone's like, it's going to reverse, it's going to reverse. Like, what does a reversal look like? We'd have to take this out. So unless you take this out, you're not reversing. So it gets up here and everyone's like, double top, or, whatever. Anyone that's trying to short it, double top. But it's still, going up at that point. So what's happening? The shorts are going to have to buy higher. And you have aggressive buying going on. It's just confirming what's happening. Straight into the highs. But the key is you can see, right? We took out 9 months worth of price action, actually 10, I think it was 10 months worth of price action. We took out 10 months worth of buying, and within how fast was it? It's like within 30 days, 10 months worth of buying was, put right back in the market. So it's like they're buying, everyone get out. And then 30 days, give or take. Let's just say it was 60 days, right? 60 days, and we're pretty much 90% of that range. We're back up there. So it's like everyone gets out, and then everyone piles back in. And since they got out down here, and maybe they bought it up in here, and now they have to buy it up at all-time highs, which is, these are the guys doing that. Does that make sense? Pins, Pinterest. So pins on the month. Takes the monthly lows out, goes green. So where's it trying to go? Technically up in here. Do we have pivots to target? We do. The week, 2 down, 2 up week. So look at this. Anyone short last week, they're screwed. Fuck them, right? Where are we going? Back through these guys. Where are the longs? Well, anyone long, they're long against this stuff. We're nowhere near taking those guys out. So everyone's short. Here's the reversal. And it's Tuesday, right? So how many days left do you have? 3 days to screw these guys. So yeah, you'd want to know about that. What do you got for tomorrow morning? Pins? Inside 4 hour. It's like, if this breaks, do we have pivots? Yeah, pivot. We got this to take out, pivot. And then this, and then this. Then once it takes this out, right, that's where you get potential. If they wanted to bring them back, they could go like this. But since they're buying this week, what's more likely is we take that out, maybe stop a few guys out, and then try and extend into this stuff. Because we know this week the shorts are covering. And there's a buyer in there. What are the main time frames we look at? We look at the month, week, day 60, but we also are watching those quarterlies, yearlies, because every time frame is going to matter. It's just a matter of what basis you're trading. So if you are a yearly guy, investor, we want to buy things taking out last year's highs. So pins, are we going to buy it this year? You could. There's a buyer in there, but notice, right? Are we anywhere near taking these shorts out? No. What about the longs down here? We're actually a little closer to those guys. Versus OKLO. 3 2-up year. They're buying this year, right? We want to be doing that too. So you can use the yearlies to know what to invest in. It's like OKLO, CCJ is an outside year to the upside. Uranium is outside year to the upside. We go to the semis. It's taking last year's highs out. That's the stuff we'd want to be buying. Obviously, like gold, right? Notice where gold took last year's highs, 257. Where's it trading? 50% higher, right? Same thing last previous year. So the 2's up, we want to buy. The 2's down, we prefer to sell on a yearly basis if we're an investor. If we are like a position trader, we might use the quarter and month. So if we're going to position trade gold, we already know on the year it's going up. So this is something we've alerted on, actually, this signal and this signal and this signal all through our all through the YouTube. But you're going to see hammer signal, boom, inside signal, boom, inside signal, boom, inside signal, doesn't do anything, inside signal, boom. So if we're a positions trader, these inside months, that's where we would want to be positioning, right? Hopefully that makes sense. And then this rep strap month was what started it off the yearly break. And you can see, right, every big up move is started first by going down. So they go down, very slight red in here, then rip, slightly red, rip, slightly red, then they rip, slightly red, then they rip. So you have corrective activity, which is the red bars closing, followed by signals back to the upside, which is the same thing as saying anyone that was long in here gets stopped out, and these guys are short. When this signal breaks to the upside, those shorts are screwed. And then they are screwed. Inside signal, inside bar, add. So the way it works is this. You have 2-2-month entry, right? 1% of your account. Inside bar, add, triple your position size, right? Then 2 down, inside bar, add, triple your position size again. Inside bar, add, maybe you reduce it for a slight loss, so be it. Inside bar, add, still going. Yearly open, well, it tells you what they're doing this year. So if it's red on the year, it's going down this year. If it's green, it's going up this year. So if we just go to SPX, every major market crash, the year's red. COVID started crashing below 3244. How far did it go? 1,000 points, right? We called the top in 2022 and the bottom before this yearly candle. It was like within the first 2 weeks of the year, we called the top of the market and the bottom of where it was going to hit. But you can see it goes up. $9 higher, goes 1,300 points to the downside, right? And then it goes green here. And then it goes 940 points to the upside. Then it goes green here. And it goes up, 1,100 points to the upside. And then SPY went green on the year here. They're already up 741 points, with a little bit of time left. But you can see, so like the 08 crisis right here. 07 was a 2-up shooter year. What's that? 2-2 reversal. And you can see if we get this indicator up in here. This is just textbook stuff that you're looking for. We can see it goes up. Right. The year it goes up, right? 2 up. So when we look at this, is anyone short? Nope, all the shorts are gone. So if it reverses, all those shorts have to pile back in, right? Everyone's long. So we wait for the next year, right? And this is why if it's 2 up in red, we don't have to play it right away. The 2-2 occurs here. So anytime we're below this year's lows, pivot, 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 pivot. We're targeting all these guys. And you can see it did break, and then it came back, and then it re-broke. A year is a really long time, right? So it goes red on the year, and it does jump around in there, but it stays red. And they take some pivots, and they start causing losses. See how it speeds up once those pivots get taken? And then more pivots, new low. So now, all the longs just got out, right? You see we go to take out some more guys. And then notice it comes back into the range. So now what? There's your pivot highs that you're going to target. So anyone short within this range, now we're going to go for those guys. So you can see the year green here, that's a buy. Red here, that's a sell. And this isn't in a vacuum. You have to know where price is at. Right? If it's right in the middle of this range and it goes red, it's like you're nowhere near taking this low out, nowhere near taking the high out. So it's more than likely corrective against this uptrend versus when it goes 2-2 reversal after all-time highs, right? Or 2-2 reversal after pivot lows from 2002. But you can see, like, if you just rip them back in here, year went red here in 73, puke. Went red here in 74, puke. Went green here, ripper. Right, so that matters. And this same thing's going to apply in every time frame. Verizon, let's see. All right, so Verizon, you had the gap down buy, nice. It hit its target, nice. So the 15er was here. The 30 was here. All right. So you didn't give me a time frame. So I have no idea what your entries were, but we'll just go, oops, that's on the wrong one. Sorry about that. All right, Verizon here. A little different, 2-2 day. Right, we had the reclaim of this low, targeting this high, so it didn't quite take them out, but they did firm up. The 30s. Move all these pivots here. So this was the daily break, 30. So you see 9:30, we take the pivot out. Then what do we wait for? Red bar, then we buy. Boom. So you can take the daily break, but if it stops you out, you have to be able to get back in if you're going to tight stop it. If you're not going to tight stop it, then what you can do is you can risk like daily open, which is, you're going to see that's a lot more risk, 1%. Let's see. Entered the 1033. Okay, it was the 15er. So the 15 3 1 2 reversal buy, nice. So you can see, right, lend that red bar and make new lows and then the signal. Exited at 11:25. Yeah. Well, why are you getting out? Can you explain why to me you're getting out? That'll help me understand what we need to change. Five-minute. So you said you entered the 5-minute at 10:33, exited. Okay. So 5-minute, let's just say it was 212 reversal, whatever the entry was, but I see what you're doing. Made some new lows. Once it's back above the lows, we buy, and then same thing here. So I'm confused. I don't know what you're doing. If you wanted to hold it longer, you'd be holding with the daily, and you'd trail your stop on the daily. You put your break even stop in, and you'd say, I'm going to let the daily keep going. Because it goes up. If you reduce it by half, you can have a break even stop in profit. Or, stop at your entry in profit above your break even. That's a better way to put it. Or you can hold the whole thing, keep your stop there. You just let her go. You got all day. And you can see, what is he trying to do? He's trying to time this one. This bad boy. Yeah, but you don't have to get out unless you're in a losing trade. Like, you just remember what we're doing. Like, if you were trading the 5-minute Verizon up here, like, we made new highs, I'm going to trade daily scenario 3, gap up, sell. If you take the trade and it goes from here to here, you don't have to get out. If your entry is here, you just go sideways, whatever. Doesn't bother you. The problem is, if you, let's say you're trading the 5-minute here, you take it, it doesn't work, and you keep holding, then you're in trouble. Right? If you take a signal here, goes all the way up, and you just hold the whole thing, maybe it stops you out break even, doesn't bother us. You can always get back in. 2-2 day here, get back in, boom, there's your money. Doesn't bother us. What bothers us is if you make the signal, you make the winning trade, then you come back to where we got it, and then it keeps going below where you got it, and you continue to hold. Because what do good trades do? They will drop really fast, and then they will not come back. Like this. It's like this one. If you take this 2-2 day on the open, and it goes like this, you better not get out of that, unless you have to. If you're a 0 DTE guy or whatever, it's like, okay, fine. Get out. But if you catch it here and it's whomp, it's like, where's the ad? Let me get more of this. Because you can gauge the magnitude and say, well, this big seller, we're going down here at least, right? And you can see why that whomp happened. We go in here. Oops. I want to show you guys this. So you can see when prices going sideways, we have all these highs and all these lows not taken out. And then what we need is that signal. You can see this 2-2 day, if it breaks, would trigger that, which could trigger this and this and this and this and this and this. And then, you know, further targets lower. So when it breaks, boom, takes out everyone. So if you were playing in this range for the last month, anyone that bought in the last month, the second we take out that low, those guys will have to sell, right? And you have an aggressive seller, so you can go even further. So when we look at this, 225, or I take my fiver, it triggers the day is racing to the highs. There's a 5-minute reversal against. Is that going to change the 2-2 day? Probably not, which means it's not going to change what this chart looks like at this point. Right, and if we look at this, you can see it's that picture perfect example of what we're talking about. Everyone's short. I'm going to buy it. Because if I'm right, I only need 1% of my account in there to make, you know, whatever, 13% on the stock, which would be what, 0.1% on your account with 0 ads. Right? Or you put 5% of your account in this trade. And if it goes, you know, you're going to make a little bit more. But the risk is still 40 cents to make 6. Like nothing. And you can see, right? It's like the key when we're looking at these really big broadening formations, the key is just knowing that this can happen, right? It's not knowing and being perfect. Perfection is it's never going to happen. It can, but it's going to be a lot more difficult to be perfect, especially if you're just learning stuff. You cannot expect to be perfect. So why even make it a goal, right? Just get better. Getting back in a trade, stop trading the 1 minute. Last Friday are rare. Not really. On SPY maybe, and everything else not so much. There's SPY was down what, like 5%. There's stocks that are up 70%, 100% today from the open. So that stuff's not rare. It's just rare on indexes because they are low volatility in comparison to other stuff. Yeah, but the key is, why did it happen? Right? That's always the question. You missed it. Why did it happen? If we look at SPY, this outside day shows aggression. What does that mean? Either side of that bar gets your attention. It breaks 2 down, which does what? Into these pivots. So we take out anyone, you know, the past 7 days that's been buying, which then takes out, you can see it a little bit further, takes this out. Now you got a lot more buyers in trouble. So it's like everyone's long, and then we get a signal through these pivots, which then triggers all of these. And when that happens matters. Since it's the beginning of the new quarter, it was also a beginning of this week up in here. This is the quarter open. This is the week open. If the week is red, they're selling this week. So when the day goes red and the week goes red and the 60 goes red, they're selling right then and there, which triggers these pivots. So the seller comes in here, triggers these guys, and then triggers everyone else into a losing trade. So you take, there's people short, and then they buy it, and then they sell it. In this case, they get stuck in the middle, sideways. But this is happening all the time. Now, does it all happen in one day? No, not every time, right? It might take 2 days. Right in here, reversal takes 3 days to make the lows. It's the same thing we always teach though. In this case, this is the buy example. But you can see if you're going to sell, they sell first, then they buy, which tells you you should be selling, and then you sell. Boom, then they buy, then they sell. And then we ideally want to buy it back up. But for now, inside week. So we'll see. Use the 1 minute after hourly signal break. Yeah, well, you can do that, but good luck. But getting back in a trade on a 1 minute, you just like it's the same as what we've already said on the dailies and everything. Get in there. If it takes you out, so be it. You're risking so little, it doesn't matter. Get back in. Should never be scared to get into a position if it's, you know, within your rules and whatnot. You see NQ right now, they're chopping them up. But if we go, the 1 minute, this is the problem. If you're going to trade the 1 minute, you better line it up with that 60. Because look at this, you're wrecked. Not what we want to be doing. But if you're trading the 60, come on. So if you're trading NASDAQ, the 60 and the 1 minute. So we just go in here. You shouldn't be getting out of this, man. This 60 breaks and it draws down, you know, points or 7 points and you're terrified. You need to zoom out. And the problem with this is when this goes 1 minute reversal, you're like, I need to get out. It's like, you still have the rest of that 60, right? All we're looking for is this, new lows and then keep going. So you're going to be terrified when it pulls back because you're on a 1 minute. Now, the way around that is if you buy it and you are terrified, reduce by half, and then your stop can go here. Break even. So then you can buy it here. Right? Comes back down into these lows. You could be trying to buy it in this stuff. Right? The problem is on the 1 minute, just be really quick when it is going. And then when it's not going, you're going to get chopped into bits. So it's not going to be as easy. What we did is we alerted on the 5 minute today. New low, 2-2 reversal, right? Give you the framing. See what happened. Right? New low, goes green. We have these pivots to come back through and target. And we take out anyone that's short. And we did that today right here. So we alerted 8:53, so it was like a minute or two after it broke. You'll see 5 minute 2-2 at the bottom of its broadening formation. I was typing this as it was racing, so I didn't get this entry myself on the 5 minute. But the 5 minute as the triangle does as you would expect. Boom. Right, and you can see we have a target in there as well. 658. So we want to see it TTO to the upside around 658 as a target, and then back down if we're going to puke today. Now in this case, went up and it just stayed up there. So you can see the buyers, boom, they blow through that level. And this is NASDAQ, but if we go to SPY, it's the same thing. For US 500, it's the same thing. You see they just blow through it. No reversal on the fiver. It's like, well, it's not reversing. Then it goes sideways. What's happening? You're getting more people short, and then you're going to blow them out. So if it was going to go and puke, we would have seen pivot, reversal, reclaim, back below this high, all that stuff, but it never did. So it just expands. And that's the next part I want to add to this indicator once we're off the stream is reclaim of the pivots, because it's going to be really neat. I'm very curious of what it would look like to have the pivots that get reclaimed drawn out, which maybe Claude would be able to do it. I'll sit on stream and do it for a little bit. Why not? So give me a minute. I was in IDBM today. Yeah, it was definitely stronger. We pointed that out yesterday on IDBM. Said if anyone's going up today or tomorrow, it's IDBM would be the one we want. Inside week. So what you need to realize is you're inside all the time. What matters is how big is the range. And what do I mean by that? Well, when we look at this chart, would we be wrong to say that all of these bars are inside of all of these bars on the left? All of these bars here? Or we could even extend it and be like this. All of these were inside? Is that true? Yes. How big was that range? 134 points. So what does inside actually mean? Inside simply means you didn't make new lows or new highs to the previous range yet. So if the previous range is 130 points, it could go inside and move 129.98 points. It could be 1 penny lower, or it could be equal to the previous range. So if we're inside the range, it tells us it's going to be less than 131.43 as far as the total range of any bars here are going to go, because we're inside of it. The problem is not that you're inside. The problem is when you're inside of a range that is small. So you can see a 26-point range. That's actually a pretty big range. So intra-week here, there's a 14-point range, still tradable. So being inside doesn't mean you can't trade it, but what it does mean is you have to time it correctly, which is true always. So how do you time buys and sells? Well, SPY made new lows on the 60-minute. That's a we buy setup, right? If you recall. Goes up, makes new lows, and then we buy. SPY went up Monday, then it makes new lows, then we buy. That's it. You just have to know that. And you have to know when this is going sideways, did it make any, big new highs here? No. Did this take out any lows down here? No. So not gonna trade it, not gonna trade it, not gonna trade it. New low, then go after it. Could we take the break to the daily versus taking? Yeah. So you have to know how continuity works, right? Think like this. When you look at a chart, right, if this was the previous range, what this is showing you, and I've always wanted to make this look, let's see if Grok or Chat GPT will do it. I'll just do it over here one sec. But what you need to think is it's like an order book. It's like if I gave you a folder with every buy and sell order in the whole market, the candlestick is just showing you what that folder has in it, if that makes sense. Um, we'll see. Sorry. Get this back up. But so when we look at this range, right, what's happening? Well, it opens at a certain price. It makes a high, so it traded up. It makes a low, so it also traded down. And then it closes at a certain price. In this case, it closes below the open. So what happened during this range? There was buying up. There's also selling down. There's also some buying up at the close of the range. But overall, people sold short because it closed red. Or people sold in general. Right? Include shorts and profit takers or people exiting long positions. Now, when the next bar opens or the next range opens, we're going to redo this. When the next range opens, we now have a new open. So are the buyers going to come and buy it, or the sellers going to come back and sell more? That's what matters. So let's say the beginning of the month is kind of sideways, and then we go tick up, tick down, broadening formation, then flip green here. Well, what's happening? Well, there's people who sold this month and last month. In this case, the guys who sold this month, right? If it looked like this, the second this goes green, those guys are underwater in a losing trade. They're having problems. So if it's green, what's happening? We're taking those shorts and we're forcing them to cover, which triggers anyone short in last month's range, anywhere in here, also to cover, which then triggers the high. And then at the high, you might get some profit taking, maybe some attempts at re-shorts. And then if it breaks again, up and away they go, right? Or sometimes it breaks the high and just never comes back, which is the best version of this. So this range, it could be one bar, it could be 1 day, 1 week, 1 month, 1 quarter, 1 year. It could be multiple bars. It could be 10 days put together. It could be 100 days. It could be 5 days, 6 hours. Doesn't matter. It's just a range. So the reason we use time frames is because it gives us, a set time that it opens and closes across a million different time frames we can use. But when we look at the day, we can look at it and be like, okay, it's been going down, so they're selling it. Yesterday was a doji. So there was some buyers, there was some sellers, and it closed in the middle. Didn't do much. When it opens this morning and goes green, anyone that's short yesterday is going to be triggered to cover if it stays green. And if it triggers yesterday's highs, it's going to trigger more shorts to cover because we're coming back through a range of people who are short or algorithms who are short. Doesn't matter. So when that goes green on the day, the second that happens, we can be a buyer. Right? It's just a matter of, are we actually taking yesterday's highs or not after that? So in order to enter this, right here, 2 down, 2 up, 15-minute at the open. When that 15-minute signal breaks, the day is green, the 60 is green, the 30 is green, the 5 minutes green, right? The week was green since it's Tuesday. So you can see your continuity. They're buying this week, today and right now, and that breaks. Therefore, the 15 breaks, which triggers your daily pivot level, right? This 15 triggers the day. So we always want to think, if this signal breaks, is it going to trigger something or is it going to reclaim something? Now, if we go to like a 4 hour, you go to the 4 hour. I like this because it's really simple. 2 down and green. Okay. I buy it above this. If it's green here, anyone short in this bar or short in the previous bar, they're going to have to start getting out. And then it triggers more guys to get out, right? Above these highs. So you can use the 4 hour to trigger the day, or you can use the 15 to trigger the 4 hour to trigger the day. So you can do 15 in entry, 4 hour add, daily add, and then hold. And that's the same thing. So if you have the 15, which triggers a 4 hour, which triggers a day, it's gonna be a very similar thing to this, right? Where you have a signal that triggers a pivot, that triggers another, that triggers another, right? It's gonna go whomp. So we want to have pivots to take out. Now that doesn't mean you need pivots in order to have a big move. What it does mean though is if we have pivots, that's a good thing. So we love charts that look like this. So it's like they're buying, they're buying, they're buying, inside bar break, pivot, takes everyone out. And then all of a sudden it's like everyone has to get out of that trade. So like if we go to, I always bring up this example just because it's a pretty one that we traded. We actually traded it with 0 DTs. It was like a 3,000%er. But this monthly, right? Shooter, which does what? Triggers this, which does what? Pivot, 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 pivot. Takes them all out. So you can see we can combine all this stuff together. We have all the pivots to speed price up when this shooter breaks and starts triggering everyone else. And then not only do we have the pivots, but we also have additional signals we can use. So right here, you see we took out the pivots, then we reclaimed. So there's some profit taking going on. There was a bearish day signal, but it didn't work. It went reversal up. And it goes up, new high, shooter day signal to reclaim the high. So what could we do? We could use that to trigger into the rest. If we go further left, this was the one we traded. Inside day here. And if you look at the day, this daily will trigger this, which triggers this, which triggers this, which triggers the monthly pivot. The monthly pivot triggers the next daily, then the monthly, and then the monthly. And you can see it's just boom. You can hear the stops going off when you see this chart, right? What you have to do is train yourself to see that where the stops are. And it doesn't have to, it's not stops in the sense of like, oh, Morgan Stanley bought a shares position and we just took out the low. Now their stop loss is triggered. It's like, it's not like that. Although there is people who put stops there. What it is anyone that bought, let's say way up in here, in this range, it's like if you bought up in here and we start going further down, these guys have to start getting out too, right? So these guys go into further loss. They're going to have to get out eventually. And then as these buyers go into further loss, we trigger more buyers into loss. So each pivot is just triggering another group of buyers into a losing trade while these buyers are getting cremated. And then it's obviously, it will eventually change direction. But that's how you want to think. Cost basis. You could use a spreadsheet, especially if you're doing options. It might be a little trickier then, but I don't have a specific, system that I put together where like, oh, just go use the spreadsheet. But the idea is just don't hold losers. So like if for example, I traded the Q's 3060 today. And the 30 breaks and it rallies all the way up here. I don't want to be a loser, so I better move my stop up, right? Since it was a 3060 trade, I at least have to reduce half once we get a 30 or 60 against. In this case, right, 60's up, inside 60 against, right here. I got to reduce half because I was using weeklies. So once I've done that, my break-even stop, if it was over 100%, I think it was like 80% at the highs, so it was like somewhere around there. My break-even stop would probably end up being, low of day, and then as the week goes on, that break-even keeps going higher as theta starts taking away from the contracts. But if we can think in terms of like, I buy a contract, it goes up 100%. If I reduce by half, it's now a free position. That's always the goal with options. So like uraniums, I bought a contract, goes up 100% for 2027. I reduce half, then it's a free trade. So I don't have to calculate anything. It's easy. And then if a new signal presents itself, I can calculate, well, how much was I up before? So if I, put $1,000 in, it doubled. So now I have 2,000 and I reduced half. It's like I made $1,000. So when I enter this trade, my max stop size would be, 1,000 if it was 1 cent away from my entry. But since your stops are going to have some distance, right? It might be $1 or something. You want to account for that. So let's just say, right? Signal I buy. Boom, there's my targets met. goes up, I reduce by half here. If I'm trading options, I'd probably want to trail the rest of that position somewhere close to my entry. Now let's say we get a new signal like this. So at this point, my break even is somewhere, or my stop would be somewhere around here. The break even is probably slightly lower. When this breaks as a signal reclaiming this low, if I made 1,000 or let's say I made 1,000 and my open position is still up $500. So I took 500 off the table. I still have 500 in profits in the trade. If I enter and I put my stop here, if I were to double my position, so let's say I bought 2 contracts, took 1 off, and now I'm buying, 1 more contract, my stop here, I'm never going to be at a loss. Because it went up, I made a ton, and then I have a tight stop on the ad. If it stops me out, I would still be up. That's where we want to be, where it's like, it's just obvious. If you're looking at this, let's say you took this trade, it breaks up, you make a little bit of money, then you reduce it. So you made a little bit, and it goes like this, and then this signal breaks, and you take the ad, you add to it, and it goes up, and you're looking at this, and you're like, wait, is my cost basis, is this, we probably shouldn't even be trading this, right? It should be like this. Like I buy it on the month, and then it goes, and I'm like, all right, well, I'm good, right? There's no way I'm going to be in a losing trade. Because then, if let's say I'm trading shares, right? I reduce by half. I'm up, if I have 1,000 shares, it'd be $5,000. You reduce by half. You have 2,500 open P&L, $2,500 in your account that you didn't have before. So if it comes back down to here and I add to it, even if I were to double my position size or triple it, my break-even stop would still be much lower. Because reducing from half here puts my break-even stop here. So if I double my position size, my equity just goes back to kind of where I bought it. If I were to triple it, maybe it's slightly above that. If I were to 4x my position size, now it's getting really close. So unless you're adding in multiples of like 4, 5, 10, where it's like I buy 1 contract and then I buy 10, you're not really gonna have to worry about like calculating things to the decimal place, so to speak. It's like if you buy this 2 month down here, and it goes $7, and you reduce some of it. If you go and add back, and you bought 100 shares the first time, and you're going to buy 1,000 this time, depending on how tight your stop is, maybe do the math. You have a month to do the math and figure it out. But you just never want to go too crazy. When it's one big candle, you can read it. When it's compound bars, you get messed up. Go to a bigger time frame. I agree. When it's multiple bars, it gives you a reason to pause. But that's why we use big time frames. So, like if you open a yearly chart, a 2 down in green year is the same thing as a broadening formation on a monthly chart. It's the same thing. It's just 2 down in green year. That's what the condition is on the monthly chart. So like if we go to MVTS, right? It takes last year's lows, and then it goes 2-2 reversal month. This is like, about 6 months into the year. So this is the yearly open. Yeah, so the yearly open's here. So it goes inside year, we're doing nothing. Then it takes last year's lows, and now we want to do something. Then it goes reversal, and the year goes green. Once it's 2 down in green, right, on the year, we just extend that open left or right. As long as you're above that yearly open, it's trying to go to all-time highs. That's how we think. And you have pivots to get there, or targets to take out. So if you take out a lot of pivots in succession, it speeds things up. Then once you take out all the nearby pivots, they have to stop some guys out, get people short, and then they have more pivots to trade through again. And this is, looking at it like this, where it's like, it goes green here, now I can buy it all year. And I have this target, I have this target, this target, this target. It's a lot easier than going to the month, and you know, we go here. This is why we have to do multi-time frame. You look at this monthly chart, you're like, that looks really bad, right? At least to take this stuff out, right? And then it takes them out right away, and it's like, well, that was it, right? Maybe it goes a little further, maybe it doesn't. But they took out the nearby pivots, and it goes green. It's like, now it's a really good-looking chart on the month, right? What matters to the monthly, if we go to the year's still green. So if the year's green, we're always going to prefer this inside bar go the other way. So if it could have broken down, it could have been a short, right? But we're always going to prefer it to go the other way, because when it does, then it expands in that direction of the big time frame. So like, let's say you're trading NVIDIA, right? It's like, NVIDIA rallied all the way up here. What am I going to do? Right? Well, here's the inside bar pivot machine gun that gets you a trade into all-time highs, and then it didn't go anywhere. So maybe you make a little, maybe you lose a little, whatever. And it comes back down. 3, shooter, 2, lower low, hammer. All right, try it again. Boom. Right? What matters is, did you buy it here and then stop out here and then not get in the trade? Or did you buy it here, make all-time highs, didn't go anywhere, I'm going to stop out, new low, new signal, I'm going to buy it here, makes all-time highs, and then it stays up there, so I'm going to hold. That's the only difference. Now this month, 2 up in red, you'll see, if we go to the month, 2 up in red, so you have the 1 bar, trying to go scenario 3-3, broadening formation. We look for that. You go to the week, shooter week down. While the market's recovering, at least a little bit. So NVIDIA, we have all these weekly pivots to speed things up, and the outside month trying to happen. Therefore, tomorrow and the rest of the week, right, we're going to see. I believe this is the previous week lows, yeah. So to break the previous week lows, you can see it breaks, and then they slight buying, and then shooter, boom, the seller's back. So as long as we're below the month open, week open, then the day open tomorrow, what we're going to look for is, can this just keep going, right? And then how do we know if it's going to keep going? Well, we want to get a green bar ideally and then go after it. But you have this inside 4 hour, which could trigger. If you look at this. So we look at the 4 hour. If this goes inside down, it could trigger this, this. And then all of a sudden you're taking last month's lows, right? All these pivots in a row. So it'll actually be on my watch list tonight. That being said, can the strat scanner scan a 2-day candle? It cannot. All right, guys. Well, we're going to call it here. We did go a little bit longer than anticipated, which tends to happen. 2 hours, it's crazy. So hopefully you guys enjoyed. And if you're interested to check out any other stuff we got, stratealerts.ai is where to find us. We have scanners, algos, all that fun stuff. We do have new things coming soon. We actually are going to be sending out some emails to see what you guys think, but we might do a small group, like 5-10 people type class. If you're interested in that, we would love to know. Make sure you're signed up. Just click start here for free. Give us your name and your email. And we may be doing some small groups in the near future. Wink, wink. So adios, guys. Have a good rest of your night. And I'll see you guys in the nightly vid and tomorrow.